obviously the end of the euro. That's the only thing that works.
Well, I think if there'll be an initial euphoric reaction, so like we saw last Friday when Boris Johnson had the breakthrough in the talks, markets move higher, currency moves higher, but then the reality kicks in and some of those gains you see dissipate over time. But clearly, as the propensity of a hard Brexit and a disruptive Brexit reduces, which is what was happening on Saturday, if the Europeans grant this extension, then the price action in the market becomes more and more muted.
That'll be interesting that gets picked up.
FTSE 100 is 80% overseas earnings, so counterintuitively there's an inverse relationship. So when you see sterling weaken, effectively the FTSE 100 moves up. But what we see is that domestically focused companies performing better when there is the prospect of a resolution, and again we would expect them to be a bit weaker on the back of what we've seen over the last couple of days. So the pound probably drifts lower in the short term. It seems unlikely we're going to get much of a resolution before the end of the month. The incentive to do that has now been pushed out with this Letwin amendment as well. So we probably trundle on for another 3 months, and we gradually probably get there through a process of iteration. Sterling unquestionably looks cheap on any metric, but that doesn't mean it's not going to get cheaper in the short term. So on a 2 to 3 year view, sterling could be anything between 10 and 15% too cheap. In the short term, it's very hard to tell what will happen.
What did you have?
See, there was retard, which is like deep fried mac and cheese or pork or something.
Yeah.
No, so we do know that we easily more.